Hello everybody and welcome to another one of IRONSHIELD Financial Planning's Fly on the Wall webinars. My name is Scott Plaskett and I'm a certified financial planner and the senior financial planner and CEO of the fee-based financial planning firm IRONSHIELD Financial Planning. If this is your first time tuning into a Fly on the Wall recording, let me quickly explain to you what this is. You're going to experience what it's like to be a fly on the wall during one of my update calls with a member of our Top Guns network. This network is my personal network of specialists. Every so often I ask a member of my network to touch base with me to bring me up to speed on the latest happenings in their area. And when they call me, I record the call so you can be a fly on the wall for that call. In today's episode, I have an update call with Charles Wilton, a portfolio manager at Raymond James Limited, a Canadian subsidiary of Raymond James Financial. Raymond James is one of the most respected investment management firms in North America. I love speaking directly to portfolio managers about their process. Process is so important to investing, and when I can get a portfolio manager to explain their process in plain English, we all benefit from this wisdom. Now, here's the call. All right, Charles, listen, thank you again for taking the time today to talk to us a little bit about a new acquisition into your portfolio. So this is a new security that showed up shortly after the time that you sold McDonald's. We then saw Viacom show up into the portfolio. So I'm really interested to hear why it is Viacom, showed up on your radar screen, what it was about the company that sort of led you to say, hey, this is a real opportunity that we need to take advantage of, and just to talk a little bit further about some of the metrics that you found on why you bought Viacom. So I'll turn things over to you and we can have that chat.
Good. Okay, Scott. Viacom, most people are familiar with Viacom. They're a pure play content company that owns a global stable of cable networks. That includes MTV, Nickelodeon, Cable-Centric, VH1. They own CBS, the network, BET. They own Paramount Movie Studios. And they're generated revenue from advertising, sales, fixed monthly subscriber fees, ancillary revenue, toy licensing in over 165 countries. So we know Sumner Redstone, and we know the company. And as we always look at, we're looking for companies that are mispriced in the market. So the market is saying either the expectations are way too high or the expectations are way too low. And when they get way too low, I take a look at the company and follow the company for a while, and then we decide, depending on the price of the company, we decide to go in and buy it. So Viacom, as we look at the screen here, the price of Viacom now at around $43. What the market is saying, and as we do with each buy when we have these podcasts, what the market is saying, if you go to valuation, the middle price to economic book value ratio, and you go down to the white level, you see 0.6. What the market is saying at this price is that Viacom will permanently lose 40% of its net operating profit after tax. And when we always say net profit after tax, we mean all the numbers, deep dive, real numbers, net profit after tax. That's based on the no growth factor of the company. So the market is saying, as of now, Viacom will lose 40% of its net operating profit forever and never grow. So as we always do, we're looking and we're saying, okay, well, why is the market down, and why is the market saying this is what's going to happen? So we're always looking for businesses that we feel that the market is mispriced. So Sumner's an 88, and there's a bit of turmoil around the board for him and his CEO and a couple of other people. He wants them off the board. He wants them out of there. He's a real curmudgeon kind of a guy. His daughter's on the board, so his daughter will probably succeed him. So the turmoil is around when is Sumner going to give up the business, because he's 88 and there's a problem with him already, and what's going to happen to unlock the value of those businesses. So unlocking the value, so there's tremendous value in all those businesses, but it's going to take a reorg to bring them out, whether they be buying or selling or merging with other companies. For example, they own CBS, which is the fantastic network. There's a lot they can do with each of the individual entities, including Paramount Pictures. So what the market is saying now at this price, at 42, is that if the company earned what it did last year and didn't grow at all and earned it the next year and the next year, the price of the stock should be $82. So here again, and this is important, that because we always do the same thing, it's important to understand, we're not looking for Viacom to make a move tomorrow or 6 months. What we're doing is we're looking for investments that have some predictability to it. So you notice the quality of the businesses that we invest in. We don't invest in, well, Valiant, for example, it goes down 90%. So wouldn't that be a better buy now if it already went down 90%? No, because the predictability factor and the credibility factor is something that I won't invest in any of those businesses.
Yeah, that's more of a gamble than anything.
Yeah, and how do I know what's going on there? I don't know what's going on there unless I have the real numbers. And even so, you notice that we stay away from all kinds of businesses that have no predictive value. So here we are here with this wonderful company, and every business in the world now is looking for content. Digital grows by the minute, so the requirement for content grows by the minute. And this has a valuable stable in 165 countries of wonderful assets. Those assets, the value has to be released, and it will be released as we even speak, I think. So I'm looking for some kind of an announcement over the next very short-term time on what the status is for him. And once we get to know what he's going to do, then there's all kinds of things that can happen with his business, but up, not down.
Right. So it sounds like it's it sort of meets all the criteria that you're looking for. It's got that sort of high predictability. There's sort of some short-term turmoil that's causing some of the current pricing. The underlying analysis is showing that pricing is really not justified for what the company is actually doing, and it just makes for what you consider a great acquisition.
So we do two things differently. One, we do not predict or project the growth of the business, because who knows that? So that's not a game that we're willing to play. And the other side is we're not in for the short term. So we look for valuable assets the same as you would. So if you were Disney, for example, or a company that decided that they wanted to make a run at Viacom, I'm not saying that they would, but if you were a business out there looking for content, then this would be the kind of business you would go after when you look at what the valuation is, right?
Right.
So intelligent business people, whether it be Disney or whether it be someone else, or Time Warner, or somebody that needs content over time, or whether it be a European mega company, or even Google or something, what's for sale? Most of the stuff is way too expensive for obvious reasons. So this creates a tremendous amount of value.
Sure. Huge opportunity.
You take a run at, where are you going to buy? Yeah, you take a run at Viacom, and what are you going to get? Paramount, CBS, Nickelodeon, like all kinds of stuff. But
Sure.
Now, I'm not saying that would happen because they have voting, he's got voting shares and that kind of stuff. But I'm saying that the value is there and it will be realized. We don't care about the timing of the realization because we don't know what it is. So what are we going to be waiting? And if it starts to move, then try and jump in? No.
Yeah. So you recognize the opportunity now. You don't know when the full value is going to be released, but you know that from a pure business standpoint, eventually it has to. And so acquiring it at the right price, which is what you're seeing it is right now, makes a lot of sense for a good long-term stable investment.
Even if it stayed, even if it was the status quo, even if Sumner hung in for another 5 years and the business is running like it is now, it's still way undervalued. So I'm not putting the value on what somebody's going to pay for their company or how they're going to do it. It's a valuable business now, but it's going to be way more valuable when you have somebody in there that will unleash it. That's not 88.
Yeah, sure, sure. Well, that's very exciting. Well, super. Well, thanks for sort of explaining that because it's always interesting to hear the rationale behind, the companies that are suddenly showing up in the portfolio. And so I like to do these calls just to give people some perspective as to where your thinking is at and where your rationale is at, and really to look at some of the numbers that you're looking at to give you that time that says, yeah, now is the time to pull the trigger. This is a great company. This is a great price to buy the company at. The value is, much higher than what the price is reflecting. So it makes sense from an investment standpoint. And here's sort of the long-term rationale that give us what I consider the margin of safety. We've talked about margin of safety in previous videos, but the margin of safety that you can see is that you're saying right now this company is being acquired for basically, can you say 40% less than its
Yeah.
value?
Well, it's not the value of the company that's 40% less. It is the net operating profit after tax for the last 12 months. So what the market is saying, they're not taking the enterprise value of the business, and they're not taking inventory, they're not taking anything. They're just taking the value of the no growth net operating profit in the last 12 months and saying on that basis alone, the company will lose 40%.
Right. And which is.
So it's the value of the cash, not the value of the business.
I see. Yeah.
Right? So now you come up with those numbers based on how well you are able to analyze reconciliate the gap accounting with the economics of the business. This is very important. So there will be people out there that would say, okay, there's a sell on this because the PE is way too high. Well, PE, that is not a value entity. So we don't look at it from that point of view. But if you do the numbers properly, go down, you're saying, well, wow, that's fantastic. But you're not seeing these kind of numbers in most places.
Yeah. Well, thank you for taking the time to go through that, and thank you for being able to identify these great companies and to bring them into the portfolio at the right price. I think everybody appreciates the work that you do in taking the time to do that deep dive, which again I would argue that most people aren't willing to do, and so to have somebody on their team that's willing to do that does take the time to go through all of that is a real asset to have. And we appreciate everything you're doing for that. Well, excellent. Well, thank you. I'm going to let you get back to your day, but I appreciate you taking the time to go through all of this. And as always, if anybody has any further questions, they can just always reach out to the planner that they're working with, and we can always, bring Charles onto a call if need be to talk about any specifics. But Charles, thank you again, and we will talk to you again real soon. Thank you for listening to today's call. If you require further information or have a question relating to today's call, please go to the comments section in the show notes below. Ask your question or make your comment and we'll respond directly online. If you would like to take advantage of a free, no obligation appointment, please call me at 416-626-6515. Or you can visit us on YouTube by checking out our YouTube channel, youtube.com/IronShieldCFP. Follow me on Twitter, twitter.com/IronShieldCFP. Like us on Facebook, facebook.com/IronShieldCFP. Or you can connect with me on LinkedIn.